This video is for entertainment purposes only and is not financial advice. Hey guys, welcome back to another video. My name is Josh. In today's video, I wanted to share with you a new stock that I recently added into my private portfolio. This is a stock that I think is tremendously undervalued at current prices. So in today's video, I want to share with you what the stock is, what the company does, and why I'm so bullish on this company. So if you enjoyed today's video, be sure to hit like and subscribe. And remember, this is not financial advice. I'm not telling you to go and buy this stock nor sell the stock. This is just for informational purposes only. So let's get right into the video. The stock that I recently bought is Global Payments. Shares currently trade at $128, and over the past 5 years, the stock price is up 82%. However, in the past year or so, its share price is down 34.22%. And from its 52-week high, it's about 42% down. Now, I couldn't find any company-specific news that would warrant such a big drop. However, in the late half of November, there was a huge sell-off in Fintech, such as Square, PayPal, Visa, MasterCard, and Global Payments being in a similar industry also got sold off as well. So what does Global Payments do? Global Payments is a technology and software company providing commerce solutions to businesses of every size. So their unique connected infrastructure serves every dimension of commerce, carrying billions of transactions every year safely and seamlessly. Now, on the face of this, it's actually not very clear what Global Payments does. And so when I wanted to find out what the company does, going on their website didn't really give me a good understanding. And I think the best place to start understanding how Global Payments make their money is to understand the payments ecosystem. So before researching the stock, I had no clue on what the payment ecosystem was. So I had to watch a few MIT Open Course lectures on YouTube. These lectures were about 1.5 hours each, and it really gave me a pretty good understanding on the payments ecosystem. So I'm going to try my best to summarize this so that you will get a better understanding on the payments ecosystem. So this is the process of a customer purchasing something at a store. So the process starts with the issuing bank issuing a card to the customer. So this, for example, a Visa credit card. Now the customer will take that card, spend it at a POS system. So the POS is the point of sale system. And what that does when you swipe a card, it's actually sending information to the acquiring bank. And the acquiring bank will pass that on through the payment network the card is on. So if you're on a Visa card, it'll go through the Visa payment network. And that information gets verified and securely gets sent to the issuing bank as well. So now the issuing bank will then take that information and authenticate it. So for example, they'll check whether what you're buying is within credit limits. They'll check whether the account is not closed. So for example, if you lose your card, you call your bank, you close the card, so then the card can't be used. So they'll check whether the card has been closed or whether there's instances of potential fraud. So for example, if you spend money in Egypt, but you're based usually in New Zealand, then chances are that looks a little bit dodgy, and that's why your bank sometimes call you up when you use your cards overseas. So once that's authenticated, everything is fine. That gets sent back through the payment network and securely sent back to the acquiring bank. Once the acquiring bank gets the authentication sorted, then it'll print a receipt at the point of sale system, and the merchant will get the money. So this is how the payment ecosystem roughly works. Now, for every $100 of transaction going through the system, the issuing bank takes $2.20. So this $2.20, usually they'll pay some of it back to the customer for rewards. So for example, if you spend $100, you get $1 back. The reason why they can do that is because they actually take quite a large chunk in this payment process. On the other hand, the payment network like Visa and Master get 13 cents per 100. The acquiring bank gets 19 cents per 100, as well as 23 cents if they're involved in the payment process. All up, this entire ecosystem will take roughly 2.75% for every $100 spent. So the merchant will only get $97.25. So this process is what happens when you're spending money at a store, you're swiping your card. But say, for example, you want to spend money online using a card, then instead of a point of sale system, you have a payment gateway instead. This is where companies like PayPal, Square, or Stripe come in. They essentially take the data and transfer it into a readable language for the acquiring bank to send it through the payment network to send it through to the acquiring bank. The reason why we have payment gateways and a lot of fintechs in this space is because a lot of the existing ecosystem infrastructure built in the 1970s and 1980s. It's very safe, but at the same time, it's very rigid. So a lot of the new fintech players come in as an add-on on top of that layer as a payment gateway. And that's the reason why we see a lot of the payment gateways are fintechs, but acquirers, issuers, and independent sales organizations are usually more traditional companies. So Global Payments sits at the acquirers section, and they also own TSYS, which is a recent merger with Global Payments. And then we have the Visa and MasterCards as the credit card associations, the issuer banks, and we also have other third parties involved as well. And these third parties usually provide some support in a certain part of the transaction, like payment processing. So now once we understand this payment ecosystem and the players around it, it's very easy to understand what Global Payments does and how they make money. So there's 3 different business segments that Global Payments are involved in. The first one is Merchant Solutions segment. This segment essentially allows customers all around the world to accept card, electronic check, and digital-based payments. So Global Payments' comprehensive offerings include but are not limited to authorization services, settlement and funding services, customer support, help desk functions, chargeback resolutions in case there's instances of fraud and you have to reverse the transaction. They'll get involved as well. Terminal rental, that's the point of sale system, sales and development, payment security services, consolidated billing and statements, and online reporting. So they offer a whole bunch of different services that are add-on on top of the acquiring bank solution that they provide. They're also involved in the issuer solutions segment. So within this segment, they provide solutions that enable financial institutions and other financial service providers to manage their card portfolios, reduce technical complexity and overhead, and offer a seamless experience for cardholders on a single platform. So based on this, my understanding is that Global Payments don't issue their own cards, but rather they help these traditional banks issue cards to their customers and providing the software around that. And the last segment is Business and Consumer Solutions segment. In this segment, they provide general purpose reloadable prepaid debit and payroll cards, demand deposit accounts, and other financial service solutions to the underbanked and other consumers and businesses in the United States through our NetSpend and other brands. So overall, in terms of the business segments, the Merchant Solutions is the largest part. So in 2020, 63% of revenues compared to 2019, which was 83%. And Issuer Solution made up 26%, and Business and Consumer Solutions is the smallest part, and that made up 11% of revenues. So overall revenues in 2020 came in at $7.4 billion, and that was an increase from $4.9 billion in 2019. And in terms of the operating margin, Merchant Solutions provides the highest operating margins at about 25%, Issuer Solutions at 14%, and Business and Consumer Solutions at roughly 16.7%. Now, it's very important to note that the Merchant Solutions dropped quite significantly in 2020, and that was a result of the Rona. As part of the Rona, a lot of their physical merchants had to close shop, and they couldn't generate revenue because if you're not transacting, you're not taking a cut out of each transaction, and therefore you generate less revenues. You might be wondering, Josh, if COVID was so bad, how did their revenue go from 4.9 billion in 2019 to 7.4 billion in 2020. So bear in mind that they have a year-end date of 31st December. So that's still an increase of roughly 50% year on year, despite the impact of COVID. And the reason for that was because there was a big merger with Total System Services, which was TSYS. And this was a huge acquisition. The purchase consideration for this merger, I should say not acquisition, is around $24.4 billion. So this was a acquisition funded by issuing stock. That's why we see the share count of Global Payments actually increasing very significantly. And as a result of that, they also brought in a whole chunk of revenue, which was to my memory about 4 billion. If you think about it, 4 billion add on from 4.9 billion. Revenue should have came in about $9 billion. However, it came at $7.4 billion. So you can see the impact of COVID. It was actually quite significant. However, on the bright side though, we see that earnings per share actually increasing in 2020 compared to 2019. So when you have a very big acquisition, chances are it might be dilutive to your earnings per share, even though they've issued a whole bunch of stock to merge with Thesis. It actually didn't impact their earnings per share. So now let's talk about the growth drivers ahead for global payments. There's two key partnerships that I'm really excited about with global payments. The first one is AWS. So Global Payments and Amazon Web Services announced a new multi-year collaboration agreement to provide a cloud-based issuer processing platform to financial institutions around the world. So remember, the issuer is the company that issues cards to customers. As part of this agreement, Global Payments and AWS will strategically collaborate to transform Global Payments' core issuing platform to deliver secure, innovative solutions for the payment industry at scale. There's a lot of words in this announcement, but the management team in their conference call explained what the impact of this partnership is. There's three key things that you need to know. The first one is that it levels the playing field by bringing leading edge technologies previously available only to new entrants to financial institutions and retailers of all sizes worldwide. With a technology solution that makes it very accessible for smaller players as well as existing players that might be on the legacy software. The second point is that this partnership triples Global Payments' target addressable market by extending their geographic footprint and transforming their technologies to attract new market entrants while dramatically expanding their distribution assets with AWS's sales force globally on a unique basis. So they're able to leverage AWS's sales force, tap into their customer base as well. And lastly, the solution brings significant benefit to customers and consumers by enabling frictionless digital experience in a safe commerce environment. The collaboration is already bearing fruit. They're pleased to announce their first joint competitive takeaway, a financial institution customer in Asia, currently with a legacy competitor to be boarded on our cloud-based solution in 2021. So they're already seeing results, and it'll be interesting to see going forward how this will impact global payments. So now the second key partnership that I'm bullish about is Global Payments and Google. As part of this partnership, Global Payments will migrate its merchant acquiring technology to Google Cloud, providing merchant acquiring services to Google to extend its global market reach. So now this is on the merchant side, not the issuer side. On the issuer side, AWS. On the merchant side, it's Google. So by tapping into both companies' customer bases, the joint go-to-market efforts will drive significant referral and new merchant customer acquisition opportunities on an omni-channel basis, as well as connect consumers with merchants via search in new and innovative ways, driving commerce and growth. It will enhance Global Payments' industry-leading merchant solutions ecosystem with additional scale, reach, and speed of market. This partnership will help merchants run and grow their business globally with speed, scale, and innovation. So very similar with the AWS side, but this side on the merchant. And by being able to leverage the Google customer base, and their reach, this is definitely very bullish for global payments. So with these two partnerships, it's enabling global payments to be a more digital technology-enabled company. So as mentioned before, they were hit quite badly by COVID because, as you can see, 40% of their business mix is not technology-enabled. Now in the next cycle, they're increasing this to 75%, and that is with the help of AWS as well as Google. So this is bullish for the company. Now, going forward into the rest of 2021, they've already reported 3 quarters. So from the third quarter earnings announcement, management expected their adjusted net revenue in 2021 to be in the range of 7.71 billion to 7.73 billion, reflecting growth of 14 to 15%, and the adjusted earnings per share be in the range of $8.10 and $8.20, or a growth of 27 to 28% over 2020. As you can see, the growth in earnings per share is much higher than the growth in revenue, so this does show that the company has significant operating leverage, meaning that when they make a lot of revenue on top of what they already make, more of that will be captured into profit because they have fixed costs that don't increase when their revenue increases. So this shows that they have a scalable business model. So this is very good. Now remember $8.10. If we take the current share price of roughly $128 per share, divide that by 8, that is roughly 16 times adjusted earnings. So this is a company that's trading on very low multiples with a pretty high growth rate. However, you might say that because of COVID last year, they didn't do very well. So this growth might actually be just a recovery into what was a bad year into a more normalized year. However, if you look at the guidance they gave, management did get a question from an analyst in their Q3 conference call asking that whether they see 20% EPS growth in 2020 as likely, to which the CEO said that from a targeting matter, that higher end of 17 to 20% EPS growth range is still our target. So this does show that even after a recovery in 2021, they still expect EPS to grow at a relatively high range at about 17 to 20%. Now, if I were a betting man, I would say that management will be able to achieve their guidance. As you can see over the past few quarters or so, actually quite a few quarters, about 16 quarters, I think, they've surprised to the upside each time. So management certainly sandbags their guidance. So if you're thinking 17 to 20%, there's a very good chance that management will beat their guidance. And this does show in their historical performance. Over the past 10 years, Global Payments has grown its earnings per share at a compounded annual growth rate of 17%. So they certainly have a good track record for growing their earnings per share, and analysts have their earnings per share in 2022 to be 9.62. So this means that the company is roughly trading at 13.5 price to earnings, and I don't have to even pull out any discount and cash flow models. I can already tell you that this company is undervalued based on its growth rate going forward into the next year and the next few years, and what they're currently trading at, as well as with their model, there's not very much capex that they need to spend on. So a lot of the profits that they make is actually translated into free cash flow. So that's a very good sign and a very good business model. Now, in terms of what I've already done is that I've added GPN into my portfolio. So I've added 64 shares at $128 per share on Hatch, and that was a $3 fee for my purchase. And recently I've also started using Interactive Brokers. So I bought 60 shares of GPN on Interactive Brokers for a total investment of about $7,600, and that was a transaction fee of 74 cents. So Interactive Broker is definitely a very cheap broker, and this is the broker that I am using now going forward. If you want to check them out, I have a link down below. Click that link to support my channel. As well as that, I've also sold a put option on Global Payments. To give a very simple explanation of what this means, there's a date on this put option. That is the 21st of January 2022. So on that date, if Global Payments is trading at 110 or below, then I have to pay 110 per share for Global Payments. So this is essentially saying that if it drops down to that price or below, I will pay $110 per share for 100 shares. So this is one option contract, and for every option contract, it's tied to 100 shares. So this is like, for example, putting a limit buy order on a certain stock, saying that you'll buy it if it drops to below a certain price. However, you get an option premium with selling a put option, and the premium that I got was $198. So this is a very good way to enter into a position that you like or buying undervalued stocks while collecting a premium, and that is what you can do on Interactive Brokers. So if you're interested in starting to buy or sell options in that case, check out Interactive Brokers link below. So that's the positions that I've started with Interactive Brokers. I wouldn't mind if it dropped to 110 so I can add more shares. But at the moment, I am very comfortable with my holding. It does make up quite a decent chunk of my portfolio now. So let me know what you think about Global Payments. Really excited to hear what you guys think about this stock. And if I missed out anything on the payment ecosystem, let me know as well in the comment section down below. Would really like to get a better understanding of this. As I mentioned before, before looking at this stock, I had no idea what it was. So a lot of this was spending, the past 2 weeks deeply researching payments ecosystem and the company as well. So thank you guys for watching this video. Until next time, guys, take care.